Tesla pushes above $400. Traders pile in long. Then it drops right back down. Drop a comment. Have you ever been caught in a false breakout? A lot of traders get in the second price crosses a level, but experienced traders wait for confirmation. Today, I'm going to show you how to tell if a breakout has follow-through or if it's likely to reverse. Episode 5 of the Trade Wolf series, Learning to Read False Breakout Signals. Using Tesla as our real chart example, we're going to break down a structured approach. First, what exactly is a false breakout? It's when price briefly moves past a key support or resistance level, but then closes back inside the previous range. Look at Tesla on June 3rd. It hit 433.60 intraday, but closed at 433.70. That long upper whiz tells us selling interest came in at those higher prices. And again on June 22nd, hit 414.75 intraday, closed at 455.5. This pattern shows up all the time in range-bound markets. It's a common technical phenomenon worth studying. Why do false breakouts happen? 3 main factors. 1. The market is in a trading range. 2. Buyer and seller sentiment is mixed. 3. There isn't enough volume to sustain the move. Think of it like a wolf observing from a distance. A patient observer doesn't react to every movement. They wait. They watch for confirmation before they make a move. So how do you assess whether a breakout might hold? There are 3 factors to study. Quick question, which factor do you think matters most? Drop it in the comments. Learn all 3 and you'll make much better trading decisions. Factor number 1, volume. A sustained breakout typically has conviction behind it. If volume is below average, it suggests less participation in the move. Looking at Tesla's June 22nd move, volume was roughly half the 20-day average. That suggests limited participation, which makes follow-through less likely. Compare that to a high-volume breakout. You'd see a significant volume spike, suggesting broader market participation. Lower volume doesn't guarantee failure, but it does warrant caution. Transition. Factor number 2, follow-through. A real breakout tends to keep going in the same direction. Without follow-through, there's less conviction. On Tesla, look at June 3rd, hit 433.60, then the next session closed lower. No follow-through. This is a common pattern in range-bound conditions. Here's an observation guideline you can use. If price breaks out but closes back inside the range within a couple of sessions, exercise caution. If it stays outside for 2 or more sessions, the probability of continuation is higher. Factor number 3, price action patterns. Certain candle formations at resistance levels can suggest that buying momentum is fading. That June 3rd candle on Tesla has a long upper whisk and a smaller body. This pattern suggests that while buyers pushed price higher, sellers became active at those levels and brought price back down. Another one to watch, the bearish engulfing formation. That's when a larger red candle's body completely eats up the previous green candle's body. It suggests a shift from buying to selling momentum. The strongest signal is when you see all 3 factors together: below average volume, quick reversal, and a reversal camp pattern. Pause the video. Can you spot all 3 on this chart? That combination suggests lower probability of continuation. To recap, study the volume, check for follow-through, and observe the price action patterns. 3 factors. 3 ways to assess breakout convictions. Patient observation beats impulsive reaction. Wolves don't lunge at every movement. They wait for clear signals. That's the discipline we're building here. Now let's compare side by side. What does a higher conviction breakout look like versus a lower conviction one? Understanding the difference helps with decision making. Higher convinced breakouts tend to have elevated volume. The price closes meaningfully above the resistance level, not just poking through with a wit, and there's follow-through in the sessions that follow. Lower conviction moves tend to have average or below average volume. The price briefly moves outside but closes back inside the range. You'll often see long wibs at the extremes. Now let's zoom out and look at Tesla's broader structure. Over the past couple of months, it's been trading in a range, roughly $380 on the lower end, $430 on the upper end. And when a stock is in a range like this, you'll see more false breakout signals, both to the upward and the downside. It's a characteristic of range-bound markets. Practical reference. The key reference levels on Tesla right now. Resistance around $400 to $400. That's also near the 200-day moving average. Support down around 380 to 384. Here's an observation process you can follow. Price approaches resistance. Observe the volume. If volume is elevated, wait for the close. If it closes above and stays above for 2 days, the condition is higher. But if volume is average, or if price closes back inside the range, conviction is lower. Consider waiting. Look for the next clearer setup. That's the disciplined approach. Alright, so you identify a false breakout signal. What are your options? There are 3 general approaches: depending on your style and risk tolerance. Approach 1. If you're already in a position, exit quickly when the signal fails. Don't hope it comes back. Exiting efficiently when a setup invalidates is a key risk management skill. Approach 2. Range trading. If you're comfortable with this style, you can trade within the range, selling near resistance and buying near support. This works well in range-bound environments. Important note: range trading is more advanced. It requires faster decision-making and tighter risk management. Not recommended for newer traders. Approach 3, and this is what I recommend for most traders. Simply wait, step back, observe, let the pattern play out, and wait for the next higher probability setup. Remember, sometimes the best decision is to wait for clarity. Wolves don't hunt every day. They wait for the right conditions. You can too. Let's recap. 3 factors to study: volume, follow-through, and price action patterns. 3 general approaches: quick exit, range trading, or simply waiting for clarity. Next episode, we're moving to multi-time frame analysis, how to look at the bigger picture before making trading decisions. One last question. Do you think Tesla's next breakout will be real or another fake? Drop your analysis in the comments. If this helped you understand false breakouts better, hit like and subscribe. I'm TradeWolf. Stay patient, stay disciplined. See you next time.